Market set to rally this morning, holding support. Will it last? That's coming up on 3 minutes on Markets and Money. It was quite a roller coaster last week as the market sold off on Thursday following that CPI report and then rallied back, a 5.5% gain in one day on Thursday following the hotter than expected CPI print, but then on Friday sold back off again, giving up a lot of those gains from the previous day all over the board, but ending up the week holding this support line that really we've been building now since the beginning of October. So that's the good news. Right now, support is holding here. Markets continue to be very oversold on functional, several bases here. So the potential here for a rally remains the case. This morning, futures are pointing solidly higher. The Dow looks to be up about 326 points at the open. The S&P markedly higher as well. So looks like out of the gate this morning, we'll get some additional buying. And again, this is kind of the action that we're looking for here, is this market to kind of build on this recent support, recent oversold conditions, get a bit of a rally back up to around 3,900. That'll be the point that you want to sell equities and reduce risk. A couple of supports here coming over the next couple of weeks. It could remain kind of sloppy here for the next few days, but by the end of the month, stock buybacks come back. The blackout window for share buybacks will end right around October 28th, and that's when we'll have about 70% of the S&P 500 reporting earnings. So we've got earnings coming in that will likely be not as bad as expected. That'll help buoy stocks here a little bit. Stock buybacks come back in earnest at the end of the month. That'll be at about a $4.5 billion daily bid for stocks through the end of the year. And of course, we have a lot of cash on the books of portfolio managers, hedge funds, etc., that have been doing a lot of net selling this year. They're very offsides. Hedge funds have very low exposure, and we have a record put to call option ratio right now in the markets as well. All suggest that there's plenty of fuel here to spark a bit of a rally between now and year end. Use that rally to raise cash and reduce your overall risk. Heading into 2023, things are going to get a lot more difficult here as the Fed continues to extract liquidity from the markets. The economy begins to show some fractures on several fronts heading into that recession. Of course, once we start to see unemployment rise or potentially some risk of liquidity events in the bond market, that'll be the point the Fed will have to pivot. But again, at that point, you're going to have pressure, downward pressure on asset prices again. So use a rally, clear up portfolios here as we get to this. Markets are very oversold here, so wait for that rally, but use that rally accordingly. I'm Real Science Roberts for 3 minutes on Markets and Money. See you back here tomorrow.